Hi friends, welcome back everyone to Any Trader Can Fly. So this is Prince once again here. So last time I made a video where I told that I trade into multiple non-correlated strategies, and that is how I avoid my maximum drawdowns. In case if you have not watched that video, please do watch. So in this video, I am just trying to touch upon a strategy which gives us benefit of both non-directional as well as direction. So most of you will be excited hearing this. Yes, this is a strategy where we will be doing option selling as well to get the theta decay benefit, and also the option buying as well. And the capital required is going to be very minimal. I'll just show you how the strategy is. I'll show you the past performance. I'll explain to you in detail. And mind you, this is a strategy for all the working professionals. You just have to spend 5 minutes of your time. And for more such working professional strategies, you can subscribe to my channel. I keep regularly posting strategies which will help for the working professionals. And in case if you want to trade full time and you want more detailed advanced technical analysis, you can install our app from Play Store. You can type Any Trader Can Fly and install our app and learn from that as well. Okay friends, so without wasting much time, let us get into the strategy. But before getting into the strategy, one very important thing is, friends, this strategy requires utmost discipline. By discipline, I mean is that day in and day out, you have to execute the strategy. You can't skip 1 or 2 days and then just say, I made loss and all those things. You need to trade daily, and I can assure you one thing, the money management is perfect, the risk management is perfect. So you just have to control your emotions and trade daily. That you have to bring the discipline. If you are able to get into the strategy, then you're automatically going to make money. And the name given for this strategy is engineer's strategy. So why engineer strategy? Because engineers are famous for building something from the scratch. So in case if you want a building like this, you can make a building. In case if you want a machine like this, you can make a machine like this. In case if you want a software program to be like this, you can make it. So in the same way, this strategy is designed in such a way that for our requirement, we are making it directional as well as non-directional. That is why I have given the name engineer strategy. And also there is a very famous strategy of mine, the doctor strategy, that also is available in my channel. It's a very good non-directional trading strategy, very good for people those who are having difficulty in maintaining your emotions, controlling your emotions. So I recommend you please watch that video in case if you want to gain confidence over emotions, right? Now come, I'll try to explain to you the engineer strategy, how it is all about. So before going to that, I'll just show you the performance. We are taking a straddle. So the capital approximate is 1.68 lakh. And in case if you want to do reduce the capital, you can do hedging. That is, you can buy 2000 points for call and put. By then your capital will come down less than 1 lakh as well. Okay. So I would say 1.5 lakh is decent amount, or at least for safer side, people those who are very conservative, we can trade with 2 lakh. And people those who are having tight budget, you can trade with 1 lakh as well. The overall performance is almost 6 lakh profit is there, and these are all common parameters which are available. But the most important thing is the expectancy. You can see almost 0.49 expectancy, and return to MDD ratio is almost 6. These are the things which you have to keep very much important, give very much importance, and also the maximum drawdown and maximum losing streak. So whenever you judge a strategy, so you can see 15% is the maximum drawdown, which is practical enough. Okay, it's not very big, and in case if you try to reduce the maximum drawdown to less than 5, less than 15, then the returns will reduce. So this is a balanced strategy where your maximum risk is going to be 15% theoretically. Okay, mind you, all these are theoretical values, backtested values. And the best part is expectancy 0.49. So even in case your accuracy is less, we almost have only 55% accuracy, but still you can see the returns is excellent. Fine. Okay. So this Excel sheet, the full backtested data is available. You can collect it from my you can collect it from either from my Telegram group. The link is available in the description, or otherwise you can WhatsApp on my number. My number is 8095876525. Right. So now let me explain to you the strategy directly, what it is all about. Now, as I told you, the strategy is going to be for working professionals. So we are going to start the strategy at 10 a.m. 10 a.m. is perfect because market would have settled, and also most important thing is if you're working, you would have reached your office. That's the main thing. Okay, so don't think why is it I'm not giving 9:30, 9:15 and all those things. Main thing, since I also was an office goer long time back, 10 a.m. is a good time where you would have settled reaching your office. So after reaching your office, you'll be in a little bit of tension, panic, stress and all those things. Settle down, take your time. 10 a.m. It doesn't make a big difference if you trade at 9:30 or 10 or 10:30, but I would say 10. And also it's not that you have to start daily at 10 o'clock sharp. Keep a fixed time for yourself. 10 is what I have told you, average time, and this is what the backtest data says. So don't go to shoot all the trades at everybody, don't go shoot at 10 a.m. some people can trade at 9:55, 10, 10:05 like that, okay, plus or minus, but trade on the same time daily. This is to avoid slippages, right? Usually if you see at 9:20 there is going to be a lot of slippage because many of them take trades at 9:20, then 9:30 there is a lot of slippage, 10 a.m. there is a lot of slippage. So that's why I'm saying take plus or minus 5 minutes, 1 or 2 minutes, it doesn't make big difference, right? Okay. So now friends, we have to get the benefit of both directional as well as non-directional, right? This is what I had told you. So to play a safe, very safe and conservative game, last time I had explained to you doctor strategy, but in doctor strategy what happens is the profits is very minimal. But in this case what happens is we take benefit of direction as well, and when the profits come, the profits are going to be very big. So this we can summarize into a concept telling that whenever we make a loss, we make minimal loss, and whenever we make profits, we make big profits. That is the overall concept of this strategy. And this is, you ask any big expert, trading expert, they say the same thing. Minimize your losses, run your profits, and you will become automatically successful. So this strategy comes under that concept, right? So what you do is 10 a.m. first keep alarm. This is the usual standard thing which I say everyone, okay. So you might think why is that we need alarm and all those things, friends? It's a part of discipline. Automatically when the bells start ringing, you will start taking action. You might be busy in job and all those things. So keep alarm, it won't make any difference. Keep alarm at 9:55 or 10:03, whichever you are comfortable, keep alarm. And then important thing which you have to see is we have to find trades strikes which are at 100 rupees. Okay, so usually I always play safely with this 100 strikes. Reason being, it gives us good cushion in case if it is OTM, it gives always good cushion. So that's why always most of my strategies you would have seen me, I take this 100 strike price. So those who are not aware of the Greeks and deltas and all those things, don't worry. That's why simple thing is at 10 a.m. whenever you're going to enter the trade, go to Bank Nifty and check the option chain. Just see which strike price is close to 100. So you might not get exact 100, so try to take at least 105, 95 in that range. And if you are not getting in that range, try to take your best, but if you are not getting in that range, then you can exit, you can wait after trade after some 5 minutes or something, but after that don't go to enter into the trade. Okay, so just give maximum 5 minutes time, you will be getting strikes between this range of 95 to 105. Most preferred one is 100. So if you are getting 100 price, please put that into your watch list, and then you just have to add call and put, right? So add the call and the put which is trading near 100, add into your watch list, and we have to sell both. So till here I think it's normal. We are doing a straddle, so most of you, every one of you will be aware of this kind of method, this kind of trading. So we are just taking a call and a put which is close to 100, and then we are selling both. Okay, so now here comes the adjustments. This is where you have to be very smart, very careful, and let me tell you, this is for working professionals, so don't worry. So as soon as your trade gets triggered, you just have to keep a stop loss order, right, at 30% stop loss. Okay, so as soon as your trade is triggered, keep 30% stop loss on both the side, but you just have to keep double the quantity. So this is where the twist comes, where we are going to get into the directional part. Okay friends, so this is giving huge benefit in the trending market. That is why I have taken this method. You are entering a trade at 100 rupees, call and put, you are selling at 100 rupees, and you are keeping a stop loss of 30 points. So let's say 100 rupees, the stop loss is going to be 130. So at the stop loss, whenever you are keeping the stop loss, don't keep single quantity. Say for example, you sold one call and sold one put, and when you are keeping a stop loss at 130, you just have to keep double the quantity. So if you have taken entry at one quantity, you have to buy, that is nothing but the stop loss at double the quantity, so 2 quantity. So what happens is, whichever leg stop loss hits, then it is going to be a directional, that is going to be an optional buying from then on. Okay, so opposite leg we already have an option selling already which is running. Now stop loss has been hit, so there is one trade which is giving us directional option buying as well. So benefit of this is that even if the market is going to remain sideways, we are going to make money in the initial phase. But if the market takes direction and if it goes into one particular direction, then automatically option buying is going to give us huge profit. Yes, on the zigzag days you might hit stop loss, but what is the stop loss? It's only 30 points. Okay, right? So let me explain to you the money management part. 30 points on the call, 30 points on the put. Again, you're taking a buy order and the stop loss is going to be the same 30%, right? So again 30 on the buy and 30 on this, on the call and the put. So the total points is only going to be 120 points. So that is 120 into 25. You might lose only 3000 rupees the entire day if all your 4 stop losses hit. But we must take that risk. So the risk is going to be only 3000, but the profit can become even 5000, 10,000 as well, depending on big, huge market movements. Right? So don't get confused. In case if you're getting confused, just go through the video once again. I'll just explain to you in single once again summary. Okay, sell call at 100, once again sell put at 100, then stop loss we keep at 130, stop loss at 130. So this we have to keep double the quantity, right? So this is going to act as the non-directional part. So this is going to be our non-directional trading. So in case if market is moving sideways or market is not making big movements and all those things, this call and put will give good decay and this is going to give us profit. But in case if market moves abruptly suddenly, then one of either of the legs will stop loss will get hit, and then you can see that it will give very good profit. Since we are taking double quantity, what happens is one quantity will get closed with this and another quantity which is there, it will become an option buying. Okay, so once the stop loss hits, obviously one quantity will get closed, another quantity will be an option buying, and then we will get the directional strategy over here. Okay, so the strategy becomes directional. So once the strategy becomes directional, so the entry price is at 130. Let's say this also 130. Again, immediately keep stop loss of 30%. That is stop loss is 100. Simple. Call and put at 100, 100. Keep stop enter both at 100, 100. Keep stop loss at 130. And as soon as 130 it gets triggered, you will be trading in the opposite direction. That is nothing but option buying. And then if the market continues in the direction, you are going to make big profit. But in case again if the market reverses, then again you are keeping a stop loss of 30 points. So again it will come and hit at 100 and your trade is closed for the day. So there is nothing like you don't have to monitor your money management, that how much I am going to lose and all those things. You just have to make sure that you keep stop losses of 30% each time for each leg. That's it. One sell and then one stop loss, that is double stop loss, and then again keep stop loss, you're done, trade is over. And friends, this is how the strategy is. Very beautiful, excellent returns. You can just try for yourself. Please do a paper trade, and also I told you discipline is the key. So trade daily, follow with discipline and you will find the difference. If any doubts, you can always WhatsApp me. My number is 8095 876525. Thank you and have a nice day.